Well, hello everyone. Welcome back to another episode of the Velocity Channel. Man, I hope your Christmas was awesome. Hope you ate all that good food. I hope you used your credit cards to get all those gifts because now you know how to pay them off and build credit at the same time. All right? Listen, before we get into how to actually pay off your loans and eliminate them as quick as possible in the year 2023, let's go ahead and make sure that you like, share, and subscribe so that others can know what you know and more. All right, let's get into it. So, you've heard me talk about the cash flow index, right? I actually got that from my friend Garrett Gunderson over there at the Wealth Factory. Man, I tell you, I'm so thankful that he's a part of our team over here at Renatus. You know, he's just an amazing man. So he got this method of eliminating his loans and our loans from a rocket scientist. A rocket scientist, yes. So there was a guy on his team named Dale Clark, I believe his name was. And he said, listen, Garrett, I got to find another way to stop all these cash flow hogging loans. I've got to do it. So he came up with a formula, a mathematic formula that works every time, all right? So it's the cash flow index number is what you're going to need. So first of all, you place all of your loans, all right, on that sheet of paper, all right? And you run them through this formula and you'll know exactly which loan to target or to focus on first and eliminate, all right? Especially in the year 2023. So let me show you how the formula goes, okay? It's not going to be hard at all, folks. I know you hate math, right? So don't worry about it. So the cash flow index number, CFI, equals, all right, you got that? The loan balance, we're just going to abbreviate that, okay? LB, loan balance or line balance, okay? You can use this with your credit cards as well. And you divide that by MM, or the minimum monthly payment, okay? And it's going to equal your cash flow index number. All right, so let's go ahead and give you an example of this. So let's put the LB as 1,000, right? It's a nice round number. And we're going to divide it by, let's see, our minimum payment was $20, all right? $20 a month, all right? So what does that equal, right? Okay. So that equals, I'm just going to do it like this, 50, right? Perfect. Now, let's go ahead and take another exact same numerator, but let's change the denominator, shall we? All right, so let's do $1,000 divided by, let's say our minimum monthly payment was $200. All right, so that's going to be much higher than $20. Let's see what that one is. Okay, so that one is going to be 5. Okay, now, why in the world do those numbers matter? Why? Why do those numbers matter? Because we're going to run them through our cash flow index model. All right? Now, remember, the further you go to the right, okay? The further you go to the right, the freer you are. Okay? So that's the goal. This is 100. The middle is 50. And then all the way to the left is a big fat 0. Now, what I want you to remember is that this is the freedom zone, free. This is the caution zone. This is the danger zone. So if you have a loan between 0 and 50, you are in the danger zone, friend. You need to get out of there quickly, all right? Now, if you're in the caution zone between 51 to 100, well, then what do you do then? You can then either restructure the loan, you can ask for a lower interest payment, right? Or you can do different things in order to get a lower monthly cash flow. Now, remember, the reason why we're doing this is because we want to stop paying so much for so little. Look at how much money is coming out versus how much money you have or how much money you can use. Okay? That's what we want to stop. We want to say, you know what, let's go ahead and utilize that cash flow for something else. Because when we can pay this off, we can then use it to fund something else like education, investments, what have you, right? Now, watch this. If I added another zero onto this, right? What would happen then? Well, then it would be 50, right? You see, the higher the numerator and the lower the denominator, the higher this number is going to be, which means the freer you're going to be. Now, freedom mode, that means you can keep paying that forever. It doesn't matter because you're still going to be okay, you know, like with a mortgage. Some people have $500,000 mortgage or $1 million mortgage, and they have a great interest rate. Therefore, that minimum monthly payment is going to be lower than those that have a higher minimum monthly payment. Okay. Now, what can we do now that we have finished with prioritizing our loans? This is what we can do. We can stick the cash flow, right? Now that we're done paying off that loan, we can now put the $200 to the one that is $20. Absolutely. Now, did I think about or did I factor in an interest rate at all in any of these numbers? No, because it's all about the cash flow. That's why. All right. So all you're going to do is you're going to factor all of those loans in and then, right, run them through the cash flow indicator, which I just showed you, right? And when you get paid, you're going to put it inside of your checking account. And then from your checking account, it's going to go to your not expenses, not loans. No way. Don't pay your loans. Not from the checking account. You're going to pay it from your line of credit. All right? And that's after you're done with the CFI. So this is exciting, right? I know you're excited. You're going to be doing this. You're going to place all of your loans. It doesn't matter how many loans you have. You can knock them right on out with the Velocity Banking method. Now, for those of you that don't like to do all the calculations, if this is kind of boring, right, and you don't want the calculations, that's okay. Because we have a tool now, okay? We have a tool now that you can use to just plug and play. So the 2023 can be bad debt free. That's right. 2023 can be bad debt free. So that's why we want you. We want you to build wealth, and we want you, hey, listen, we even have lines of credit, all right? So if you're looking for a first lien HELOC as well, please come at me because we have different scenarios that we would love to run through with you, and then we'll meet you. We'll have you meet CJ Squared, right? Yeah, we'll explain that much later, but it's going to be amazing time for those of you that need that line of credit and are interested in the first lien HELOC. Whew. That's on a whole nother level there. All right, folks, God bless you, and you have a great night.